In this video, I am going to show you how I made $3,500 in just one single trade by trading my funded account that I have with the Funded Trader program. Before I deep dive into the details, I give you my strategy. If you are new to this channel, you know what to do. Consider hitting the subscribe button and turn on the notification bell. And I also very recently have started a Telegram group which you can join if you have any question regarding prop firms. Link is in description. So now let's deep dive into today's video and see my trading strategy that I have used to make over $3,500 in one single trade and break down the steps that are going to help you understand what is my trading strategy and how you can copy that and trade your own account with the trading strategy that I use. So that's my trade to be exact. I took an entry from this level, put my stop loss right here and my target take profit right at the higher high area. And it just hit my take profits after the news came out and I pretty much made like $3,500 from this trade. Now why I took the trade, what made me think that market is gonna go for the buy side, what were the confluences that I got that made me take the trade. I'm going to cover everything. So every single time when I start analyzing the market, if I'm going to be doing the day trading, if I'm going to be only taking the trade from 5-minute time frame or from 15-minute time frame, I always start my analysis on 1-hour time frame. And there are few things that I like to do. First, I go on 1-hour time frame and I look for the overall market direction. I find out where the market is heading, whether the overall market direction is going for the upside or it is going for the downside. In this example here on Euro US dollar 1-hour time frame, we have the market direction which is going for the upside. How do I know? If we just look at this much data that is available here, you can clearly see that from here when market stopped going for the down, it continued its movement to the up. It reached at this level right here and then market went down. Now when it went down, we have two price levels. The first one is the highest price in this range and the second is the lowest price level. So we're gonna mark both of them. That is the lowest price range and that is the highest price level where the market reached. Now right after market could not break this level, the lowest point in this range, it continued its movement to the up. Now when it continued its movement to the up, it made a strong movement to the up, then created a high low and resumed its trend to the upside, which broke the previous market structure. Now on this level, there are 3 times when market could not go higher than this. The first one was right here. When market tried to go break this level, it could not. The second is right here and the third level is right here. So 3 times market tried breaking it, but it could not until it actually broke and made a new higher high. That is now going to be acting as a very key resistance level because we have tried multiple times to break this level to go up, but we failed. That means market failed. Now that we know market is making higher high and high low sequence, it has broken the previous strong market structure area, strong resistance that was resisting the market to go down every single time. We have broken that level. We went up, we created a higher high. So that means overall market direction on 1-hour time frame is for the uptrend. Now one confluence that I have that yes, this is actually an uptrend. If you will just look closely during this movement that broke the previous resistance, look at the volume here. Now you might be thinking, what is this volume? It's an indicator. You can add that by going on indicator section, typing volume and selecting the third one from here. And once you do that, you will have to change the settings just like the way I changed. You have to put 20 MA length, moving average length. You have to go to style. You can put similar color in the growing and falling bars and you have to tick volume MA and also select area. Once you select area, it will look like this. You can just change the opacity. So that's how it's going to look like. Now, every single time when the volume bars are going to be higher than the moving average, that means volume is increased. There were a lot of people buying. So we know that when the market, it broke the previous market structure, volume was increased significantly. That's one confluence for me that yes, this price level, that is one confirmation for me that yes, this movement actually means something because of the higher volume. So these are 2 steps. First, identify the market direction on 1-hour time frame. Find out where the market is going. Is it making higher high, higher low, or is it making lower low and lower high? And at the time when it is creating higher high and high low sequence or lower low and lower high sequence, is it breaking the previous market structure? In this example right here, we broke strong resistance. Then add volume indicator and see whether at the time of breaking the market structure, was there enough volume? If there is enough volume, that means we are going to be very interested in looking for potential buys in case of buy trend. So the third step is going to be that move down to 15-minute time frame and wait until market goes to the level which is a key resistance level from where we previously broke the structure and went to create a higher high. Once market goes to that level, then I'm going to show you what we need to do. So let's go down to 15-minute time frame, and on 15-minute time frame, that's how does the market structure look like. Now here was the level which we're going to be considering our higher high, because that's the highest price right here. Now when market it started to go down towards our key resistance level, which is right here, we need a specific pattern, a specific market structure in the movement during the pullback. Now how it's going to look like, let's just say that that's the key resistance level that market just broke. When it broke, we need similar pattern that I'm going to show you. We need sellers during the pullback to come down first, then some buyers need to come up, then sellers to try again, and then buyers to come up. And then after that, sellers to try again to come to this level, which was the resistance, and starts rejecting from here. There needs to be a slowdown movement. There needs to be several rejection right at this area. Then and only then we're going to be considering, yes, we're going to take the buy. Now, if you just compare the left hand side here, which was the strong buyers movement, and you compare that to the right hand side, which is the pullback from the sellers, you will see how market is going down. It is creating small lower low lower high sequence, and that's what we need, because on the smaller side we need people to think that market is making us lower low and lower high sequence, and we want them to turn into sellers. That's the trader that are trading on 15-minute time frame or on 5-minute time frame, and they're not looking at the overall market structure. They're just looking to take the trade quickly and get out as fast as they can. We want them to enter into the sell, so there will be enough liquidity grab. Now here you can definitely see that how market was coming down. Market came down, then buyers went up. Then market came down, buyers are showing their way inside the seller's movement every single time until it reached, and when it reached, we have our first rejection from here. Buyers started to show a little bit of strength as compared to the strength that they were showing before. But it does not mean that we're going to be randomly taking the buy. We need at least 2 rejections, and then after that, if we get the opportunity during the third time, then we're going to be taking the trade. Now at the second time when sellers came down, they definitely came down with a lot of strength. It made a lot of people to go for the sell because they thought that they just broke this small market structure. Instead, buyers came. Now when buyers came, what's happening? They are confused. We know that we are inside the buy trend because we are looking at the perspective of 1 hour. But the traders who are retail traders who are losing, they're looking at it from the 5-minute and 15-minute perspective, and they're looking at it as a sell. At the same time, we have got our 2 rejections. Now, one very key point here, when sellers are coming down, we have to compare the volume during the sell movement to the volume of the buyer's movement, which broke the key resistance. Now, if you just compare all of these volume to this, look at the volume bars. They were way higher than the moving average in the volume indicator. And when we look at the seller's movement, just see how the volume is showing the strength. There is no strength basically. And we have got 2 rejections as well. So what we're going to do, we're going to wait until market comes down to the level where we had our second rejection, and it comes down and it starts to take out some of the trades that people were placing, maybe for the buy. Now, after all of that, what we're going to do, we're going to wait until market comes to the level again from where we had our second rejection. And once it comes, we need a lot of volume for the buy side. Now, at this time, when this seller's movement happened, there were a lot of volume for the sell side. That's why I decided not to take the trade at here. I decided to wait. I first wanted sellers to lose the volume and buyers to start picking up volume. Now, when that happened, after the third rejection, when buyers started to go up, it happened when sellers came to the same level for the 4th time. Look here. So it definitely now looks that We were having this sell movement. We made this low, then buyers went up. Then we made this low, which was an equal low. Buyers went up, equal lower high. And now instead of us creating a lower low, we are going slightly higher. At the same time, look at how strong the volume started to show. This was the volume that was really making me think, all right, it's time that we're going to be taking the trade. So I ended up placing my trade, my stops just below the level of the rejections, all these rejections, and my target at the high area. And my trade was exactly like here, and that was my target. And I pretty much made 3.5 rewards from this trade. I risked $1,000 and I made $3,500. Now, how many confirmations I got? I got one confirmation that yes, this buyer's movement, it actually had a lot of volume in it when it broke the previous resistance. And the second confirmation, when sellers are coming down as a pullback, look at the volume, there was no volume. Then the third confirmation was we needed two rejections. Both of the rejections were there. Fourth confirmation was that when sellers are going to come down again to the level, when they will come, we just need to wait until sellers lose momentum in the volume indicator, and at the same time market to just start to create a little bit higher price every single time. And when it started to happen, we started to see some buyers volume, we took the trade. These were 4-5 confluences that made me take this trade. And I pretty much made over $3,500. So that is the strategy that I used to trade $3,500 today by only spending 30 to 40 minutes doing all the analysis. I was just waiting. I wasn't looking at every single candle. I was placing my alerts every time. I was just waiting until market is going to come to the price levels. Then I'm going to do my analysis again. So let me know if you got any value out of this video. And if you haven't joined my Telegram group, please join from the link in description. That's it from this video, guys. I will see you in the next video. Bye for now.